Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 1st of March. So last week the big story of course was all around the spike higher in bond yields. That opened up a frenzy of market reevaluations across multiple markets. The US dollar, which found support at that key 90 level, managing to rally very quickly up to 91, and with the strength of that move giving us a bit of a signal that we could see continued sort of strength and supportive prices in the dollar going forward. The index markets had quite a sharp sell-off, and so did commodities as well. Commodities move more or less on the back of the strength of that dollar pushing commodity prices down. So before we dive into a couple of opportunities here that we're looking at the beginning of this week, I just want to remind you of Wednesday's live trading session. It's run on a live trading stream published on YouTube. The link to the session is below the video here in the description. But if you'd like to get notified, if you'd like the information to be sent straight to your inbox, then come across to the Smack the Markets website and sign up to our newsletter, and we'll send those through each time we run them. So let's take a look at the markets now. So if we take a look at the Dow here, we can see the significance of the sell-off last week after the market had made a new high up here at 32,000. If we have a look at the market structure on the higher time frames, we've still got good structure here. These trends haven't broken, they've merely sort of pulled back into fair value areas. So the weekly still looking rather nice, but even if we start to come down to time frames like the daily time frame, we can see the impact that the price moves that have had over the last half of last week have had on the market. So some significant moves down into that key 31,000 level, and now we're starting to find a little bit of support here. Having said that, I think that the index markets are going to find a little bit of a struggle to get back through all of these levels to the long side. Now it can be done of course, but our focus is very much going to be trading opportunities in between these technical levels. The 31,200 level was a very significant level on the market. As the market came down last week, it found key support here and resistance on the Thursday and the Friday. Now the market's sitting at 31,200, so we've got some decent trading windows to the long side and the short side that price action have reinforced time and time again. So at the moment we've got 31,200. If we can find support here, then 31,300 is the next significant level to the long side. If at any time we start to see weakness here, then we could start to see some steps again to the weaker side on these markets. Some of these index markets, particularly the Nasdaq, from a technical perspective, are looking much weaker. The Dow not quite so. If we have a look at the commodities, I mentioned that precious metals had come off fairly significantly. Again, the strength in the dollar certainly hasn't helped that. Last week we said that from here, the 1800 level, the market broke underneath here, we could see weakness and a test down here to 1750. That's happened. We saw that fairly swiftly move last week. Now the market's retraced back up to 1750, and again, if I just sort of zoom out of this, you can see we've got quite a structure point here on 1750, and it's certainly an area where we may well find a bit of support. If price can get above here, then we could see a bit of a retracement, but if we can't, then 1750 does look like quite a nice area where we could see even more significant weakness, and that could see us a push down towards that sort of 1700 and even possibly 1650, which is the next sort of structure point on these markets. Now even when we start to come down to the lower time frames like the 4 and the 8 hour time frame, you can start to see reasonable trend structure here, and also currently the market rejecting the 1750 area. So within the context of the trend, again, possible sort of areas where we might start to look for positioning. Now coming over to the currency markets, we are sort of spoilt for choice really. There's quite a few which are looking rather interesting from a technical perspective. Some of the markets that we're liking are the continuation of the weakness in the yen and the Swissy, which we've actually seen for quite some time now. The yen predominantly has been quite a weak market for quite a few weeks now. So markets like CAD yen are starting to look particularly interesting. You can see the move here as the CAD yen broke out of the 82 level. Quite a structure point here for this market, and now it's moved up to the 84 price point. Again, at the moment we're actually looking at possible strength of this market breaking through here. The yen is continuing to be weak, and we may well see again a breakout here to the long side. Again, we've got good market structure, good convergence on these higher time frames. If you have a look at the daily time frame, again we've got some very nice trends here forming, and the market sort of finding support here right over the bracket of that 84 price point. So even coming down to sort of lower time frames and taking a look at the mid time frames like the 4 and the 8 hour time frame, we can see that there is key support here where the market has now had resistance, and now price has now sort of break into the long side. So we're starting to see a bit of a turnaround in these lower time frame trends, and as long as this market can stay above 84, we're starting to look at positioning for a continuation of CAD strength and yen weakness. Now, this is not the only currency market. There are many currency markets which are starting to look really sort of quite interesting, and I think the play on that US dollar is going to be one of the key drivers for the currency markets going into the this week and maybe a bit beyond as well. So there's a few markets there that we're keeping a close eye on in the trading room at the beginning of this week. I certainly hope it helps, and look forward to speaking to you on Wednesday. Bye for now.